To another video of accounting with the think tank. Today we are going to take a step back and try to answer the question, why do we do accounting? What objective, what goal are we trying to achieve by doing accounting? Who benefits from accounting? So for us to do that, we are going to borrow from paragraph 1.2 of the conceptual framework, because it does provide guidance or an answer as to why do we even do accounting in the first place. So here they're saying that the objective of general purpose financial reports is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions about providing resources to the entity. So what does this mean? Let's try to break it down. So here they are saying that our goal is to provide financial information. Our goal is to provide financial information. So what is information? Information is data processed to reveal meaning. So if information is data processed to reveal meaning, so what is data? Data is just a raw fact. It's just a raw fact. So in this case, in accounting terms, these raw facts, we are speaking about the transactions. So essentially what we are trying to do, we are trying to transform, or we are trying to convert these transactions into information that can be useful to who? To who? This paragraph is going to answer that question. But for now, what you need to understand is that we are trying to provide information. So we are trying to convert now raw facts in the form of daily transactions that happen in the business. So we are trying to transform those raw facts into information, so into data that has been processed to reveal meaning. So when something has meaning, it means that you can be able to take decisions, or you can be able to make decisions using that information. So we are trying to transform financial we are trying to provide financial information to who? About who? And how should this financial information be? So when you continue with this paragraph, it's saying about the reporting entity. So the reporting entity is the business. So it's the business. So this information needs to be useful. It needs to be useful. So what does this mean as well? So for information to be useful, it needs to meet two qualities or characteristics. It needs to be relevant. So in other words, it needs to give you the important facts or the important information. And it needs to have integrity. It needs to have what is called integrity. And integrity in accounting, they say it's faithful representation. So what does this mean? Faithful representation means that this information should be free from errors and omissions. So what are errors? Errors are mistakes, and omissions, it means that nothing should be left out. So we are trying to provide financial information. So we are trying to transform raw data in the form of daily transactions into something that is meaningful, into information, something that we can use to do what, to take decisions. So that's why here they are saying it needs to be useful. So when something is useful, it means that it is relevant. So by being relevant, it means that it contains the right or the correct information or the important facts about the business. And then it also must have what is called data integrity. So data integrity in accounting is called faithful representation. So when something is faithfully represented in accounting, it means that it must be free from mistakes, it must be free from errors, and also nothing should be left out purposefully. And then let's continue. And then it's saying as well, this information must be provided to who? So it answers who. It tells us this information must be useful to existing and potential investors, lenders, and other creditors. 1, 2, 3. So what does this mean? Who are these people? Why specifically these people? Why are we trying to impress these people? Investors, lenders, and creditors. Investors, it's people who invest money into the business. So these people who invest money into the business, so these people who invest money into the business, they are going to form a part of what is called equity in the accounting equation. So investors are the ones who provide equity because they invested their own funds into the business. And lenders and creditors is who? Lenders and creditors, it's people who have provided liabilities to the business, so they want their money back. So lenders and creditors. So we are trying to provide useful financial information to these people. Why specifically these people? To these people because these people have provided or have an ability to provide funds. They have an ability to provide equity, and they have the ability to borrow us money so that we buy resources, which are assets. So that we buy assets. So we are trying to provide financial information to these people because these people are important to us since they give us money. So investors invest money, and lenders and other creditors, they borrow us money so that we are able to achieve our objective of buying assets that we can use to generate profit. And I hope it makes sense. These people need this information so that they can make decisions about providing resources to the entity. I've already explained this. So these people, they need this information so that they can make decisions, so that they can decide as to whether they should invest in the business or not, whether lenders should borrow the business money or not. So this is the purpose. This is why we do accounting. We do accounting to provide useful financial information to the people who have provided us with funds to start the business, or to buy resources so that we can start the business. These people would include investors, lenders, and other creditors. I hope it makes sense. So just so that you can see this graphically, so that you can see this graphically as to what we do and how do we get to a point whereby we are able to provide useful financial information. And I'm going to use this diagram. I hope that it's visible. And so think of this as this cone here, or as this funnel. And there's data that is going to come in. So this data, these are transactions. So on a daily basis, we take transactions we transform them. We take data, we transform the data, we process the data into information. And data is just raw facts that don't have a meaning. But when those raw facts have been transformed into useful information, it means that we can make decisions, because now this data has a meaning. So what we do on a daily basis, or how do we even produce this financial information, we take transactions on a daily basis, and then we put them, or these transactions, they undergo these steps in our accounting process. This is called the accounting process. So these transactions undergo this accounting process. And the end result of these transactions undergoing this accounting process is that we produce information that is useful. So essentially what we do, we transform data in the form of transactions. We transform data in the form of transactions into information, into data that has meaning, so into information that you can use to make decisions. Who uses this information is investors, lenders, and creditors. I hope it makes sense, guys. So moving on. So what is this information? So this information includes this financial information includes financial statements. So you've got your statement of profit or loss. So you've got your statement of financial position. You've got your statement of changes in equity. Then you've got your statement of cash flows. And then the last one, it's notes to financial statements. So this financial information that we provide, and it comes as a package of 5 financial statements. They include the statement of profit or loss, statement of financial position, statement of changes in equity, statement of changes of cash flows, and notes to financial statements. So what does this one do? This one provides information about the financial performance of the business. So the question that we are trying to answer with this one, did we make a profit or loss? So this statement is going to answer those questions, and it includes what? It includes income and expenses. And then the statement of changes of financial position. The statement of financial position is a snapshot of the accounting equation. So it gives you information about these 3 elements. So it gives information about assets, equity, and liabilities. So it tells you essentially how the assets of the business are funded. And are they funded through equity or liabilities, or a combination of both? So it's going to give a snapshot of the financial position of the business. So the statement of changes in equity, this one is going to tell you about the movements that happen in the capital that is provided by the owners of the business, which are the investors. And then the statement of cash flows, this one is going to tell you about the movements in cash that happened during the year. And then the notes to financial statements. These notes essentially they provide detailed explanations to amounts or line items that appear in either of the four financial statements. This information, for it to be useful, it needs to have certain qualities. I've already discussed some of these. So it needs to have certain qualities for this information to be useful to the users. So it must have a fundamental characteristics. It must have these fundamental characteristics, and also these enhancing characteristics. So fundamental characteristics, these are the primary qualities, and these are the secondary qualities. Fundamental characteristics, it means that this information, it must be relevant. So it means that it must have important information, and then the information must be a faithful representation of what happened during the financial year. So this is data integrity. So information must be free from errors and omissions. And then the secondary characteristics, which are the enhancing characteristics, they include the information must be timely, or timeliness. So it means that the information should not be old, and it must be verifiable. The information must be verifiable. So it means that any other person who is within the accounting fraternity, they must be able to verify this information, and then or there must be proof for this information. It must be comparable. So this information, the people who need this information must be able to compare with other businesses that are within the same industrial sector, and it must be understandable. So this means that any other person who is doing accounting or who is within the finance or commerce field, they must be able to understand these financial statements. Okay? So these are the qualities that this information must have so that it can be useful. Okay? This includes fundamental characteristics and enhancing characteristics. Okay? I think for this video we are going to end it here. For this video we are going to end it here. So if you have questions, please send them under the comment section below. If you've got anything that you want me to clarify, please don't be afraid to comment as well. I'm going to see you on the next video, guys. Please look out for my study guide, which I'm going to be able to produce or release in February. There are no ebooks. I'm not going to do ebooks, guys, or electronic copies. You pre-order the study guide, and then we print the study guide for you. I'm going to be printing in February, guys. So if you'd like to have the study guide, please as well try to get through to me. Send me a WhatsApp. And then if you also want tutorials, I'm going to be having group tutorial classes. It's going to be online, guys. I'm going to be having group tutorial classes, and for that as well, send me a WhatsApp if you'd like to be part of the group. They're not going to be free though. Each and every month you'd have to pop out 150 for the group tutorial classes, and we are going to have classes every month, guys. And then for the study guide, the price of the study guide is 350. On the study guide, I explained everything. Guys. So if you have that study guide, it's going to be difficult for you not to get a distinction. If you practice with that study guide the whole semester, you are going to get a distinction, because I only explain the things that you need to know there, and I go deep with the things that you need to know, so that you also understand the logic. There are flowcharts, there are examples from past papers, and I explain how I do the examples step by step, transaction by transaction. So if you'd like to have that as well, the study guide is 250, guys. But if you have watched the video up until this far, thank you very much. I'm going to see you on the next one, guys.